Well, I think that a 40% move in small caps doesn't mean the rest of the market goes down. I just think that it's going to highlight that the market is broadening, which is something we all expect, but it's also basically doing a risk reward analysis, which is, look, I think if you can get 18% earnings growth and pay 10 times earnings, perhaps that's a good risk reward. And I think money that's on the sidelines or people who've been thinking bonds are going to be and cash is the place you want to stick for the next 5 years, but if the Fed starts cutting, they're going to look for places where there's good risk reward, and I think that's small caps.
Nvidia's recent 40% surge highlights a pivotal moment in the market, showcasing its dominance in AI and technology. Investors are eyeing undervalued small caps as potential high-reward opportunities, particularly if the Federal Reserve signals a shift toward neutral interest rate. Nvidia's upcoming earnings are crucial for the market narrative, given its role in driving productivity through AI. While competitors like AMD strive to catch up, Nvidia remains a long-term buy with a strong position and reasonable valuation. Shifts in Fed policy could provide tailwinds for the broader market, especially for small cap. However, Nvidia's continued technological advancements keep it well ahead of the competition, solidifying its leadership in the AI space.
Do you expect them to have similarly dramatic moves, or is there a major rotation that you're expecting?
Well, John, we've already witnessed this happen in large caps. Nvidia's risen 40% in 8 trading days. So when someone says the Russell 2000, which is made up of even cheaper companies, can't rise 40% in the next 5 months, they're forgetting that we've already seen huge moves in the mega caps. I don't think the mega caps have to go down.
Do you expect it to happen in isolation with the small caps is what I'm getting? I know that Nvidia's done that. Some other stocks have done that themselves. But if you're talking about all of the small, the small caps as an index moving up that much, what do these other things do?
So you recently added to Nvidia. When we have analysts talking about, the cost of catching up, it seems, as I said, implicit they're talking about Nvidia, the cost it's going to take to try and catch up, maybe not all the way to Nvidia, but at a place to be certainly more competitive.
Yeah, that's a tall order. I mean, so first of all, I think, Dr. Lisa Su is amazing, so I would never discount her. And actually the revenue guide was like 7.5 versus 7.54. And they even said plus or minus 300. So to me, it's just like sentiment was coming in wanting a big number. Obviously, the gaming was weak. But I do think that this whole catch-up trade, just in general, if you think about it, NVIDIA is also cannibalizing themselves with creating faster, bigger GPUs like Blackwell. And there will be a point when these big cloud service providers go from training to inference, and then all of a sudden, do they need all that compute? And so I think this catch-up trade, I'm not so sure about that, because by the time they catch up, well, we need all of these chips or GPUs anyway. And so I think the market has sniffed this out. It's up, 2% for the year versus NVIDIA's up, 160?
Barely.
And
well,
so
we're going to show you. Yeah. I'm sorry. As you finish making your point, Brent. Excuse me for jumping in. We're trying to put together right now the stock by stock look year to date on AMD versus Nvidia. So excuse me, but continue as we throw that up.
Yeah, I was just saying, take AMD as its own company. They do different things. There is crossover, but as it relates to AI spend, the GPUs and Blackwells rests squarely with NVIDIA. It's just it is what it is. And so I just don't think that catch-up is actually sound mathematically.
There you go. I mean, if that doesn't tell the story, I don't know, Jason Snipe, what does. You tell me, because you own NVIDIA and you own Qualcomm, you don't own AMD. Right. That's not a very compelling story that you need to. I don't necessarily think.
At all, Scott. I mean, obviously the price action tells a story without a doubt. And I think, it was clearly a light guide. It was a messy quarter. I mean, beat on the top and bottom, whatever. But the guidance wasn't great. And I think when you go back to ASML, and their earnings, which were messy as well, and then you saw what happened with Taiwan Semi, which I know is Weiss's stock, which was blowout. it just goes to show you that there are a few companies that are really, really winning here. And Nvidia, like we always say, the Beltway and the interstate rides all the way through Nvidia, and I think that's why a lot of folks own it.
Weiss?
I mean, let's call this for what it is, okay? You've got a stock that came into the quarter at 80 times trailing PE, which is almost a third higher than what Nvidia was. They don't have the same growth rate. They're still more expensive than Nvidia today, and they're more expensive next year. So what were people thinking? This is purely a momentum trade. I don't care how great a CEO Lisa Su is. I have no reason to believe she's not. I do respect her and like her, and this isn't her fault. Now, her fault may be catching the GPU wave a little late, right? But CPUs are still important. But the point is, it was asinine to own this stock at that valuation when you've got Nvidia selling at a lower valuation. They're both overpriced. I own Nvidia. But I don't know what went through people's minds, and we'll talk about maybe a healthcare company similarly positioned like this. It still makes no sense in AMD.
Well, let's get to two things. Let me ask you before I get to Meta then, since you brought up the beneficiaries of the spend. What's going on with AMD? You own that.
Yeah.
That stock's having a terrible day. It's trying to play catch up, I think is fair to say. What's your own view for somebody who actually owns this stock?
Yeah, so the debate internally is AMD, if you weren't looking at the results from Nvidia and others, is doing really quite well. It's growing nicely. The growth is reaccelerating. They upped their targets for their AI data center business. However, those expectations today are much lower than they were at the beginning of the year. And the expectations for next year are still lower than they were at the beginning of the year. In other words, AMD is expected to be a huge winner. Right now, it's a winner, but you've got other places that seem to be winning the battle there.
But I mean, as long as it's compared to Nvidia in the near term,
right,
that's the potential problem moving forward, right? It's a problem until it's not.
Correct.
But I mean, the outlook, when do you have an idea that you really think that AMD can be a viable competitor to Nvidia? Because that's what the market seems to only care about.
Well, one of the challenges that they have is Nvidia itself is a tremendous competitor. So Nvidia's next generation of chips is talking about leapfrogging again. And there's kind of a fear, like, frankly, AMD's seen it before long ago. Remember when it was a competitor to Intel but never really could gain market share? It lived in that sort of middle land for decades. So we'll see in the next year, I think, whether or not AMD can start to gain back share against Nvidia. But for now, it remains sort of a second source supplier. And the fear is that Nvidia, not only ramping up the technology, but improving supply, may sort of cap AMD's near-term opportunity.
I mean, do you need dramatic cuts for that thesis to pan out? Or are there other potholes in the road that you see that threaten your thesis?
Well, a recession would be negative. I don't think the Fed has to make major cuts. It actually just has to. I think the market narrative that would be the best for small caps is the belief that real interest rates are too tight now, 5.5% versus inflation trending towards 2%, and getting rates back down to a neutral rate of 3%. If the market believes that, they don't need the cuts to be front-end loaded, but they have to believe we're going back towards neutral. I think that'd be a huge catalyst for small caps.
Okay, now let me ask you about more about mega caps and about the consumer. How important, not necessarily just to small caps, but to the whole market narrative, will Nvidia earnings next week be?
Well, Nvidia is really important because it's underpinning really what is driving the U.S. economy, which is a real push towards productivity, using basically digital tools and automation. That's a very important disinflationary trend. And of course, the US companies, all of the big ones are all the US. I mean, it's a global phenomenon that benefits US companies. So I think it's incredibly important. But Nvidia, trading at 26 times forward earnings isn't that demanding a stock either. So it's not like I would say sell Nvidia to buy small caps. I think Nvidia is still a long-term buy.
Now, what about the holiday season and the consumer who's very stretched, particularly the working class consumer? What kinds of numbers perhaps did you expect to see at the beginning of that season? Oftentimes that can set the tone for how retail stocks and some other things perform.
Yeah, the consumer is under stress. I mean, it's known that things that are high interest rate, like credit card, auto loans, HELOCs, adjustable rate mortgages, these are all subject to Fed policy. It's been a very penalty rate for consumers when inflation's coming down and they're paying these very high rates. So cutting rates would be a tailwind. Falling gasoline would be helpful as well. And I think the third is CEO confidence and has been put on hold as long as the Fed's been tight. If the Fed starts to signal a rate cutting cycle, I think businesses will start to be more expansionary, and that's good for consumers as well.
With Lyft, that I guess tries to take on Uber One, what more do they need to do?
Look, I think they are in a spot where they have the core market, which is the best and the most profitable market. Every new thing they touch, be it grocery, be it overseas restaurants, or any new growth, there is already competition there, and profitability in those new growth areas is going to be structurally lower. So that's the worry we have with DoorDash. It's a market leader in US restaurants, but in everything else they touch, their profitability is going to be slightly lower and lower and lower as the days go by. GAAP profitability is extremely important. It's probably the only $60 billion market cap company with the first quarter as a GAAP profitable being reported today. So again, I think valuation is a key concern for us, and I think what happens to this company next 12, 18 months as growth is going to be mid-teens and profitability longer term is not going to be as high as standalone mobility business like a Lyft or a global leader like Uber. So that's why we are neutral.
Okay, Rohit Kulkarni and Dan Ives.
Nvidia's recent 40% surge underscores its pivotal role in the market, driven by its leadership in AI and productivity-focused technologies. As the broader market looks for growth opportunities, undervalued small-cap stocks may present compelling risk-reward dynamics, especially if the Federal Reserve signals a shift toward more neutral interest rates. Looking ahead, Nvidia's technological advancements and strong positioning keep it a standout in the AI space, even as competitors like AMD attempt to catch up. The potential for a more accommodative Fed policy could broaden market opportunities, but Nvidia's leadership remains critical to shaping the narrative. Do you see Nvidia's leadership in AI continuing to dominate, or do you believe competitors like AMD can close the gap in the near future? How do you evaluate the potential of small-cap stocks in the current market environment, given the possibility of changes in Fed policy?